This week on 9th May, we have two webinars lined up for you. Market is up, your portfolio isn't. What's going on? This is happening by 11 a.m. Followed by which, Risk versus Reality, is your mutual fund portfolio built for today's market reality? This is happening by 12 p.m. Both these webinars are happening this weekend. Make your weekend a happy learning weekend by clicking on the link in description. We will await to see you there in our webinars.
Time to do the April review of the US Boring Stocks Index. The 10 stocks that constitute the US Boring Stocks Index, which I curated, are Crocs, Uber, Amazon, Alphabet, Apple, Pepsi, Kava, Meta, Netflix, and Costco. These 10 companies are weighted equally to create a portfolio of $1 million. 100,000 each. It's just for your math. You can always curate a portfolio with whatever value you want. But the weights should be equal. And let's see what has happened in this portfolio during the month of April. If you created $1 million portfolio in the month of April, it became $11,12,086 at the end of the month. So 11.21% is a simple return which the US Boring Index earned in the month of April. For 1 month, this looks like a spectacular performance, especially if you are investing in markets like India where we are struggling. But the Nasdaq 100 had an even better month in April and it made 14.27% in that month. So let's say you put $1,000, it became $1,142. The MSCI World Index, however, didn't do as well. So if you put $1,000 in the MSCI World Index, it became $1,081, giving 8.11% return. But how has the US Boring Index performed against these two benchmarks, which is the Nasdaq 100 and the MSCI World Index, since Jan 1, 2026? If you invested in the US Boring Index on Jan 1, 2026, $1,000 became $1,123.66, which translates into 12.37% returns. During the same period, the Nasdaq index returned only 5.67%. So on a yearly basis, we are doing much better than the Nasdaq index. Interestingly, the MSCI World Index has also done better than the Nasdaq 100 since Jan 1 till April 30th. $1,000 became $1,060 and that translates into 6.04%. So you have a 0.4% outperformance in the MSCI World Index over the Nasdaq 100, which means a lot of other markets have clearly done better than even the Nasdaq index during this calendar year. Now look at the US Boring Index from the date of inception, which is 31st August 2023 till 30th April 2026. What has happened is the US Boring Index during this period has returned 83.72%, while the Nasdaq index has returned 77.3%. The MSCI World Index has returned 56.1% during the entire period of ownership of this US Boring Index. So we've beaten the Nasdaq index comfortably by close to 6%, and the MSCI index has seen a much bigger, much wider outperformance, which is roughly 26%. Overall, the Nasdaq has been moved by a small set of stocks. We do own some of them, but not all of them. The stocks that we own outside of the FANG stocks are all companies which have not been fancied, but we have consciously chosen to buy out of fancy stocks which we believe in. So it's a nice blend of fancied stocks and not so fancied stocks in the US Boring Index. But the most important thing is the kind of learnings that I get and share with all of you. You're free to make your comments on this index in the comment section on your experiences. There are quite a few people who are now running a kind of a contest on Twitter. You can see it on investing in the US to these same rules. Some of them are doing exceptionally well, but it's fun. And I'm not going to make any changes in this index. I'm not allowed to as per my own rules. But in the other contest that's running on Twitter, I'm sure a lot of contestants will change because that's how they want to play it. But I'm just going to be passive with this portfolio. Maybe once a year I will change it. There's a lot of time left for that. Meanwhile, have fun and learn a lot through the US Boring Index. I'm doing just that, and I'm happy that I'm doing it with all of you. Thank you for watching this video.